Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video I'm going to take you through gold as price is starting to look like it's about to turn over here, and I wanted to just point your attention to the fact that we have high volatility news this week. So what we usually see in weeks like this is that the dollar usually benefits from a high impact news week. Not only that, we have lots of dollar data to consider. We've got CB consumer confidence, we have ADP non-farm employment change, we have the ISM manufacturing PMI, we have JOLTS job openings, we have the most important to me, which would be the federal funds rate, and the FOMC press conference and statement. We also then have the non-farm payroll data at the end of the week, which then is followed by the ISM services PMI. So this is a big week for the dollar and the markets in general. And when we usually see something like this, we can often see money flowing out of sort of risk assets, moving into sort of what we class as safe haven assets, that being the likes of the yen, a little bit of the dollar, as well as gold. However, the correlation between gold and the dollar has been really strong recently. In our previous video, we discussed the fact that we were expecting breaks above 1875 and a move up to the 1910 handle, and then perhaps to 1920, even up to this 1973, depending on how the US dollar index reacted to the lows that it was coming into. So if we kind of look at this breakout here, that was through sort of the first week in January, and we rallied up through there. Now if I go over to the US dollar index here, you can see that was when we had this breakout here. Now we were talking about price kind of trading between the 103.75 and the 105.50 handle, and we were talking about if price found resistance at the 105.50, traded through the lows at the 103.75, we could expect to move down to the 101.50, which in turn would see the price of gold trade up to this 1920 handle here. So basically showing us that the correlation there is strong, and you can even see it in these weekly candles. If I zoom in here, you can see that the range on the weekly candles have been fairly low here, considering what we've seen in the past. So what we've seen is almost a very similar thing to what we're seeing occurring in here, where we have this kind of move up into a resistance level, a consolidation, and a breakout to the upside. This time we're kind of above the consolidation zone, but we're holding. Now we're waiting to see how the dollar index reacts, to see if we get the move to the 1973 or whether we pull back down into this 1875 area. And I think the key to this is going to be that US dollar index. You know, looking at the weekly chart at the moment from a technical perspective, I would say we're more likely to pull back to the 103.75 because we've had this sort of extension down with very little pullback. And you know, we can see there was, last time price came into this area, we had lots of demand in the market. So I wouldn't necessarily expect price to come all the way back to these highs from here, but I would expect maybe some kind of relief to this move down, which could then in turn push price up to the 103.75. Now this area is just going to be crucial anyway, because if we were to then trade through 101.50, let's say the dollar data doesn't go the way that the market is anticipating, and maybe the Fed are a little bit more dovish in tone, a move through 101.50 is likely, and the next area then would be the $99 area. Now I think if that happens to price, then the price of gold is going to be up at this 1973 handle, where these highs were formed back in April of 2022. But what I'm just forewarning you is that we need to be very aware before trading gold, that we need to look at the situation on the US dollar index. Now if I go to a 4-hour time frame here on gold, you can see that we're pretty much trading within a trading range. There's also arguably sort of a head and shoulders being built in and around this area, with this 1920 handle being that sort of neckline area where you can see we've had sort of multiple areas of price finding support and those buyers coming in. So one thing I would look for, if we did see sort of gold start trading to the downside, a break below this low and 2 closes below could signal that we are going to see a negative move here. And what I would then expect on the dollar index is the range that we're seeing there on the lower time frame as well, a break above the range, and that would then coincide with this break to the downside here on gold. And like I said, if we get that break to the downside, we've got sort of the $1,900 level to contend with, as well as this sort of 1875 handle where we consolidated on a higher time frame. So that's what I'm watching for here on gold, because I am anticipating that dollar to be a little bit stronger going into this week. Obviously we don't know exactly what's going to happen, but that's what I'm expecting in the short term. And if we do, we could trade back to 1875. If however I'm wrong, then we could expect that move up to 1873. So we have to stay very liquid in these type of markets at the moment. We have to be adaptable to the situation. So keep your eye. It's going to be on the markets. It's going to be a really tricky week. So hopefully you navigate it well. And I hope you enjoyed this video update. If you did, leave it a thumbs up. Subscribe to the YouTube channel to see some more of our Forex trading content. And I'll speak to you in the next video.